Hi, I'm Pratik Kala and I'm the head of research at Apollo Crypto. Let's talk about Bitcoin. Bitcoin has dipped even below when Trump got into office, and this is despite the industry getting favorable regulations, a strategic Bitcoin reserve, billions in buying from ETFs and DATs like MSTR or MicroStrategy. So, why has there been such a huge drag on price? Well, there are four primary reasons for it. I will illustrate each via a screen share and discuss why. But to start, let's have a talk about these four reasons. The first is old whales have sold with both hands. We have credible evidence of large selling, the highest in Bitcoin's history of sales from old holders. The second reason is Bitcoin miners are pivoting to AI, selling existing Bitcoin on balance sheet and even selling forward Bitcoin production. So Bitcoin that hasn't even been mined yet. Bitcoin miners are facing increasing competition and wanting to diversify their workloads, are servicing AI hyperscalers. They were also heavily incentivized to do that, as everyone knows AI was a hot trade. The third reason is leverage bubbles, such as 1010, known in the industry, which occurred on the 10th of October 2025, has distorted faith in the market. For people that weren't in the order books, 1010 or the 10th of October was a catastrophic event for many in the industry. Many funds, market makers, and others were wiped out due to a flash crash and saw prices dip between 60 to 90% for many altcoins. The last reason is because of Trump. So Bitcoin is a Trump coin and a USA coin, as is popularized in media. And so, with everything happening in the world, there is unease about holding a coin that is Trump adjacent. And so, there are a lot of people, institutions, other holders that do not want to be associated with it. And so, they have also decided to sell. For the people listening now, I will be sharing my screen and illustrating each of the points that I've discussed above. Okay, so on to the illustrations. I'm sharing my screen right now for people listening if you'd like to have a look. The first one is looking at the sales of Bitcoin from OGs or from people that have held for a long time. As you can see in this chart, every orange or red line is sales of Bitcoin from people that have held a substantial amount in the past, so over $100 million or even over $1 billion. You can see the activity rising significantly in 2025. So any lift in prices was immediately, suppressed by a large sale from a previous holder. Now, people may wonder why now have these people decided to sell? Multiple reasons for it. The base case is because this is the first time they are able to sell in history. They've held Bitcoin from 2015-16, are likely up 100 to 500 or even 1,000x. And this is the first time in history that they could realize some of it without crashing the price of Bitcoin. One. And the second reason is actually sell it legally, because prior to this, because of Operation Choke Point and various adverse hostility from the Biden administration, selling something of this size would have been impossible, or would have raised a lot of flags, or led to the freezing of assets or bank accounts and so on. So under Trump, this is the first time in a decade that they could realize some of these gains, and so they chose to. And so any lift up in prices was immediately suppressed at scale by people that had been holding for a long time. The second reason is Bitcoin miners pivoting to AI. This from a Bloomberg article. You can see that some of the public miners are keeping the Bitcoin they produce, expecting that the digital asset will rise in value. But at the same time, an increasing number of companies are spending more and more developing data centers to power AI applications. Why are they doing that? Well, they're doing that because Bitcoin miners' profitability is quite volatile because of the price of Bitcoin being volatile and relatively low margin. And so these AI companies with the workloads have approached a lot of Bitcoin miners and have agreed or have asked them to pivot to servicing some of their AI workloads. And some estimates show that this could lead to some stable, revenue generation for a lot of these miners, including healthy operating margins. Now, that's not to be that's not to be a scary statistic, because if you actually do look at the hash rate of Bitcoin in 2025 alone, it had gone up 30%, and it has been going up only. So the strength of the network is ever increasing. However, we are seeing some miners pivot to AI workloads. Some people may question about this recent dip over here. It's a mix of the freeze in the US as well as some of the miners pivoting. But since 2025 alone, the hash rate is up 30%. And from 2020, it is up more than 5x. So the network is very healthy regardless. And finally, we're also talking about 10/10 or the 10th of October, which is when crypto had a flash crash. This is a good chart from Coinmetrics and basically talks about the tick-by-tick data on the day that led to the flash crash. Now, it's a mix of Trump posting 100% tariff threats on China that led to a flash crash in crypto. And various assets went anywhere between 20 to 30% to as much as 70% across many exchanges. Some exchanges also noted a price of zero for some altcoins, and due to cross margin and various other reasons, it just led to a mass scale liquidations across the sector until prices marginally recovered. But unfortunately, by then, a lot of the damage was already done, and a lot of market makers and funds were impacted heavily. And finally, also the fourth reason is crypto being a Trump coin. So whether people like it or not, crypto has associated itself strongly with Donald Trump. And there is, because of everything that is happening in the world, there is a large cohort of investors that do not want to touch any assets that are associated with Trump, whether it's crypto or other sort of assets that people are rebalancing their portfolios on. So these are the four main reasons why crypto and Bitcoin has been under pressure. Now, because of the reasons above and the lack of Bitcoin's price accelerating upwards, there's a lot of people that are questioning whether Bitcoin's thesis is still intact, whether if it's an effective portfolio diversifier, whether it is an effective hedge against the debasement of currency, and whether or not it's digital gold. Now, there are hundreds of reasons I can point to why none of that has changed and why Bitcoin's core proposition is even stronger than before. But let me just point to some of the main catalysts that happened in 2025 and let you make the judgment yourself. Now, let's talk about some of the catalysts of 2025. The first one is Donald Trump establishing a strategic Bitcoin reserve. Now, whether or not you like Donald Trump or his policies, it is still very important to note that a global superpower like the US has blessed Bitcoin and has created a strategic reserve for it. The indication alone is actually very, very important and is a critical turning point in the history of Bitcoin and cryptocurrencies largely. These decisions are not made lightly to create something like this, so it was a huge turning point that occurred in March of 2025. The next one is the FDIC clarifying that prior approvals are not required for banks engaging in crypto activities. Now, prior to this administration, it was close to impossible for banks or anybody else to offer any crypto adjacent activity, whether it's brokerage, using crypto as collateral, or anything else. There was a lot of red tape and very difficult for them to do so. So this basically cleared all the banks from providing any crypto adjacent services or other borrowing lending facilities. The third big catalyst is Trump opening the door for crypto in retirement accounts. Now, this is huge because the 401k in the US, similar to Australia's superannuation system, is huge. And they were previously forbidden from investing into crypto, and now Trump has opened the door for that. This happened in August 2025. And to give you a scale of the size of the 401k industry in the US, it is close to $36 trillion. Currently, the crypto market cap is below $2 trillion. And the size of the US economy is roughly $35, $36 trillion. So this is just the money sitting in the 401k system, not even including money sitting outside it. So Trump has created a pathway for 401ks to invest in crypto. The next big catalyst was Trump signing the Genius Act into law. Now, this has effectively allowed the proliferation of stablecoins, and that's why we're seeing enormous growth in that sector. This is a huge win again for the entire industry, and the vision is to again making America the leader in digital assets. Interesting to note that BlackRock's most profitable ETF is a Bitcoin ETF. This was only launched in January 2024 and is already making more money for BlackRock than its hundreds of other ETFs. I always say Wall Street needs an incentive, and the market has shown that this was one of the most successful ETF launches in history, and Wall Street is incentivized to continue talking about Bitcoin and crypto and selling it. And after BlackRock, let's look at Morgan Stanley. They penned an article on November the 14th titled, "Does Crypto Have a Place in Your Portfolio?" The important point over here in this article is looking at the portfolio implications, and that they have recommended getting off a zero allocation to most people and most investors in the world. You'll notice here that they recommended a 2% for balanced growth portfolio, 3% for market growth, and 4% in aggressive and opportunistic growth portfolios. The 4% asset allocation to crypto is immense. Morgan Stanley is one of the largest private wealth managers in the world, and they have a huge sales and distribution team. And for them to pen an article like this will move mountains eventually and lead to immense inflows, I believe, in the future. Next catalyst was JP Morgan. They and Jamie Dimon, the CEO, has historically hated crypto, and they too are turning a corner and allowing JP Morgan to provide services for Bitcoin and Ethereum, specifically using it as collateral. The next catalyst was US clearing the way for crypto ETPs to get into yield without triggering tax problems. Now, as you may know, crypto offers yield, not Bitcoin, but the likes of Ethereum and Solana offering anywhere between 3 to 6% yields. And historically, the ETFs were not able to pass that on to consumers and investors. This has now changed, and now there's a range of ETFs that would be able to provide that yield. So the opportunity cost of getting into crypto has also decreased. This again was in quarter four on November the 11th, 2025. So again, very favorable policies coming our way. The next one is Vanguard. Vanguard has historically disliked crypto as well, but they too penned an article on December the 1st, 2025, talking about crypto. The key highlight over here is Vanguard allows the trading of select third-party cryptocurrency ETFs and mutual funds through a Vanguard brokerage account, but do not offer their own crypto products. So prior to this, they weren't even allowing people to invest in any crypto-adjacent equity or stock. They've turned a corner. They do not offer their own crypto products at this point in time, which interestingly segues straight back into Morgan Stanley. Very interestingly, just 4 weeks ago, Morgan Stanley filed for Bitcoin, Solana, and also it filed for an Ethereum ETF. This is really interesting because when you launch an ETF, typically the first mover advantage matters a lot. BlackRock launched its ETF in January 2024, and Morgan Stanley is coming a full 2 years after into the ecosystem. And many people are questioning, why have they even bothered? Well, I'll take a guess. I think they've bothered because they've seen how much money BlackRock has made, to the tune of billions of dollars. Bitcoin ETFs have become their most profitable product. And Morgan Stanley internally from their private wealth clients is getting a lot of heat saying, hey, we want to invest in this. And, they can sense that this is not going away, and that, better late than never. And to offer this to the huge cohort of private wealth clients and put it on the platform. They may not reach number one, but they definitely don't want to be left behind. So big turning point for Morgan Stanley coming in 2 years after the official ETFs were launched. Shortly after, Bank of America as well, again a large investment bank, an wealth advisor has given the green light for Bitcoin. They have 15,000 advisors, and they have now considered Bitcoin ETF allocations for the first time in this month. So this was again on January the 8th, so just a couple of weeks ago. Again, they have talked about a 1 to 4% allocation, similar to Morgan Stanley, again, getting off zero, which is very, very important. I think between Morgan Stanley, UBS, and Bank of America, they control the predominant share of private wealth managers and high net worth individuals, institutional sort of asset management. So all three have come around to advising getting off zero and allocating some to crypto. And also, finally, Charles Schwab, one of the largest brokerages in the U.S., has also advised that they will allow their millions of clients to trade spot crypto. So again, one of these very strong catalysts. And this was on December the 4th. Now, hopefully, it's abundantly clear that the news flow and catalysts for crypto were second to none in 2025. Ask yourself, why would all the asset managers change their tune in 2025? Why would Morgan Stanley join the ETF race a full 2 years after BlackRock had already won? Why would Vanguard lift their restrictions after holding out for so long? And what does a 1.4% allocation to crypto from thousands of financial advisors managing 401ks mean? Find me a news site that doesn't talk about Bitcoin or crypto every single day. It is on Bloomberg, CNBC, Reuters, macro papers, currency papers, research papers, and even political papers. It is quite clear. Bitcoin has reached Lindy and is not going anywhere. This is but a temporary dislocation due to reasons mentioned at the start of the video, but Bitcoin's core thesis has never been stronger than before. Now, remember, Bitcoin is incredibly reflexive. When it runs very, very hard. And when it runs, it would make the catalysts of 2025 look obvious in hindsight. Maybe something like silver and gold. In my opinion, this is exactly the place people should consider getting greedy. The picture, the backdrop for Bitcoin and crypto has never been better. Prices are at a discount, and you should definitely consider taking an allocation if you have not already. Thank you.